Pretty boring day for the stock market today, guys. Markets are about to close in less than 3 minutes from now, and we pretty much are about to break even across the board. Well, maybe not the NASDAQ. That is down about 0.3%. Boo frickin' who, right? It's up like 10% in the past 2 weeks. So the NASDAQ's down a little bit, but other than that, the S&P's down barely 0.1%. We have the Russell up 0.07, Dow's up 0.1, 0.2%. So it's pretty much a consolidation day after we've had all this volatility, which honestly is not so bad in my opinion. So we're going to break down the markets in this video very quickly. We'll take a look at what I'm looking out for heading over these next couple of days, and we'll break down some stocks, of course, later on in the video. So make sure you guys stick on throughout, hit that like button, make sure to subscribe as well. Don't forget to follow me on X2 at Stocks Talk Stocks, link down below. And if you want some free stocks from Moomoo, check out the link down below as well. Deposit at least $100, you get 5 stocks each up to $2,000, and you also get a free share of SoFi stock. So get on that, guys. Link down below, and let's dive right into it. So it's about what, 358.42 exactly, actually. So the markets are about to close in a little over a minute from now, and again, it's pretty much flat across the board except for the NASDAQ leaning red a little bit. We do have a little bit of selling across some of these big tech names. Let me pull them up here, guys. Apple's down about 0.9%, which a lot of that sell-off came in the morning. You guys can see, boom, big drawdown in the first really hour, not even 30 minutes, 25, 30 minutes of trading. This went from 186 down to about 184.30. So that was a 1% drawdown in Apple in the morning. We had Google, also known as Alphabet, right? This is down about 0.3%. We have Microsoft probably down as well. 0.8% in the red right now for Microsoft as we have 30 minutes left of trading. Meta's currently, let's see, up a little bit, barely, 46 cents in the green. And which one am I forgetting here, guys? Of course, Amazon. How can I forget Amazon, guys? This is down 0.7% after a sharp drawdown in the morning, followed by a V-shaped recovery, recovering all those losses, right? You guys can see Amazon in the pre-market was at about 143, got down to about 140 and a half, bounced off that, and markets, boom, are about to close. There we go. And Amazon ended up going up a good amount, or it recovered a good amount, but still it has yet to break the highs from last week, which you guys can see on Friday. We hit about 147, or not 147, 143.70. You guys can see that. So that's going to be a spot moving forward here on Amazon. Might as well get right into it, guys. So Amazon's one, of course, that I own, that I'm watching here as well closely. You can see we do have a bit of an ascending triangle here. Do you guys see that? We have clear resistance at 143.50, but also we're making higher lows. So we have this wedge right here, or not a wedge, ascending triangle. So you guys can see if that breaks, zoom in a little bit, boom, draw this line out. 146 could be around the corner for Amazon. And if that breaks, we could be going up even higher, maybe towards, maybe not all-time highs quite yet. We're still a ways away from those. But look, 144, 145, that range was also the high from August of 2022, which makes it a huge resistance right now. You guys can see here, if I draw a new line, let me show you this, or maybe just extend this to the left. You guys can see how big of a resistance that is. And we have a cup and handle as well. You guys can see on this 3-year chart. You guys notice that on Amazon, cup, handle. So keep your eyes on this. Actually, an inverse head and shoulders as well, clear as day. So if I had to bet, I don't know, it's tough. I mean, there's a lot going on right now in the macro environment, but I think that Amazon, there's a good likelihood, at least in my opinion, and full disclosure, I'm in this stock. I own a bunch of shares. I think we're heading up. We'll see. Maybe not in the short term. Maybe not in the next 6 months, 12 months, 18 months for all I know. But by the looks of it right now, it could be coming in my opinion. So AMZM, keep your eyes on it, of course. And before we break down more stocks, guys, before I get carried away here, let me show you what's going on this upcoming week, and in particular this Wednesday, guys. We have a big Wednesday coming up. As I'm sure you all know, a lot of economic data is coming out. Let me show you this on the, what is this, Forex Factory, whatever it's called. You guys know this website, maybe, I don't know. But look, Wednesday in the morning, 8:30 a.m. on the East Coast, we have the core PPI, We have the core retail sales. We have the Empire State Manufacturing Index, PPI month over month. Actually, wait a second. That's Wednesday. No, Tuesday is the big day. Well, Wednesday is important as well, but Tuesday is the big day because we have the CPI. PPI is very important as well, but of course, when it comes to the stock market, a lot of the eyes are on the CPI. Jerome Powell, all that good stuff, right? His thoughts, this, that, the third. You guys know how that goes. So, look, 8:30 a.m. East Coast, we get the core CPI month over month, which projected at 0.3%, and last month it was at 0.3% as well. Yep, the number on the left here is the oops, I lost my place here on this stupid website, guys. Oh man, where am I now? Yeah, on the left side we have the number or the forecast, and I think on the right side we have the previous. Yep, left side is the forecast, right side is the previous. So you guys can see, let's break that down a little bit. 0.3% is the monthly number, and remember, there's a monthly and the yearly number. The yearly number here, if I pull that up, is actually, no, that's for core CPI, is 0.3%, right? So that's excluding food and energy, but CPI 0.1% current, or the forecast, and 0.4% was the previous number. So that's actually a huge drop projected in CPI here that we're going to be expecting, right? And on the annual number for CPI, 3.3%, you guys can see right here, that's the forecast. And last month, it was 3.7%. So that's actually a pretty sizable drop in the annual number as well, which is a good forecast for everybody that wants inflation to fall down, which is everybody, right? Everybody wants inflation to come down. And we have the 10-year Treasury yield, guys, which I'll start covering this more. I'll start including it in the analysis just to cover it quickly for, maybe 30 seconds a day. This was obviously very volatile today. It hit a high of 469.60, which that ended up coming down a decent amount, right towards 463.40 is where it's at right now, and it's slightly up on the day and maintaining that 463-ish range throughout the course of the last 24 hours. As you guys can see on this one-day chart, on the 5-day chart, you guys can see it's come up a good amount over the last 5 days alone. It was 447 about 5 days ago. Now it just hit 470. I think that was on that might have been this morning. Yeah, 469, and now it's at 463. Still up a good amount over the past 5 days. And, of course, we'll see what goes on with these auctions. I made a video earlier today talking about that and what's been causing the movement we've seen in the bond market, stock market. Go check out that video if you guys have not done so already. So let me come back over here to Think or Swim, guys. And by the way, if you're finding value, smash that like button. Make sure to subscribe. It really helps me out overall in the algorithm, and it's free, guys. It's completely free to subscribe, and I think 45% of you guys, funny enough, are not subscribed. I'm not sure why. You watch the videos, but you don't hit that subscribe button. So if that's you, make sure you guys do that. I appreciate you all as always. And let me break down some other names now that the stock market has officially closed as of 6 minutes ago. And the biggest one that I'm looking at really is Amazon. This is a very big play coming up, in my opinion. We'll see. Of course, nothing's guaranteed, but we're approaching a big spot. If 146 could break, man, who knows where this thing could be going. So AMZN, watch out for that. We also had a couple of other movers today. Groupon ended up moving, which is on the high short interest list. I haven't talked about this one in a while, but they reported earnings, it looks like a couple of days ago. Was that on Thursday or Friday? Let me see if they're on the live news tab here. Let's break this down very quickly. So it looks like they did negative 12 cents in adjusted EPS, which missed the 11 cents expected. So they were expecting 11 cents in the green, came in at 12 cents in the red, not good. And sales also missed 126.47 million versus 129.64. So double miss for Groupon. And let's see, anything on guidance or anything else of the matter? Yep, they see Q4 revenue of 127 to 137 million. So that $10 million window there, which I'm not sure if that's better or worse than expected. And man, that's a lot of revenue for Groupon. I'm not sure, does anyone even use Groupon anymore? This was something that I used back in college like 8 years ago. What the heck's going on here? Who uses Groupon anymore? Let me know in the comments, guys. Do you? I don't know. I haven't talked to anybody that uses that anymore, but I guess someone's using it, man. 127, 137 million top line. Let's see anything else here. Groupon's earnings crater after CEO says business continues to be challenged. All right, there you go. I mean, I guess their revenue must have been a lot higher before, which don't quote me on that. I mean, obviously I've not looked into it, but just based on that, based on that statement, yeah, probably not doing as well, especially on the bottom line, guys, which they missed on that. Now they're in the red. They've probably been in the red for quarters, but forget about that. This is a high short interest play, meaning it could move regardless of fundamentals, which we haven't seen crazy squeezes in, these days as we saw 2-3 years ago. There's no doubt about it. But this could still be at least a relief rally candidate if it's able to come down maybe even more, maybe back towards the $8 range. Maybe it breaks the $8 range, gets to the 6-7s, right? This could be one that sharply bounces back like we've seen it do time and time again, which for sure this is going to be the riskiest stock we're talking about in this video, guys. But it's one that's very beaten down. Earnings did miss, yes, but at some point, I'm thinking we could get a snapback. Time will tell. What do you guys think? So Groupon, keep your eyes on it. I mean, today it went up 9%, so maybe the snapback is starting. We'll see. And we had Virgin Galactic go up around 30%, I think, the other day, and today it's continuing its gains. I think that's after the earnings report, right? You guys can see it shot up from $1.50 to $2.08 after earnings, pulled back a little bit, calmed down, retraced, consolidated a bit. Now it's starting to break right back up. 10-cent Green Day, 5.6%. And this is after, I believe, they reported decent revenue for their standards, right? Geez, voice crack, guys. Let me get a little sip of water. Cheers. At least according to their standards. And, it popped. Saw a little bit of a sell-off because it ran, I mean, let's be honest, it ran a lot the day of earnings, day after earnings as well. So now we're starting to break back out, and the resistance we're approaching is the high from Friday morning, it looks like, about $1.90, $1.92. Let's see what we do there, guys. Do we break? Do we start going to $2 again? Do we break $2? Time will tell. Virgin Galactic is pretty risky as well, no doubt. Very risky in the same category as Groupon, but it is showing momentum, which is why we're covering it in this video. Let me see, guys, what else? We had Nikola move today, which I'm not a fan of Nikola at all, obviously, guys. But I do watch it for maybe a quick little trade, although it's still very risky, so I'm not even going to go into Nikola in this video, but it did go up 4.5%. All right, we had Tesla move up massively today, about 4%, which I'll make a separate video on Tesla maybe tomorrow, so I'll save the breakdown for that. CrowdStrike, this is one that came to my attention, well, not came to my attention from somebody else, but I was looking at the charts earlier and I saw CrowdStrike's chart and I was looking at it and I'm like, ooh, this could be dangerous heading into earnings because look at how much it's been going up over the past couple of days and the past couple of weeks. I mean, look at this 5-day, 5-minute chart, guys. It was at 183 a week ago, last Monday. Now it's at $201. It hit 150 earlier in the day, which is a move of I think 10% at least, right? Yeah, 10%, which is huge for just a week. And on the 20-day chart, you guys can see, I mean, look, this thing back in the end of October was at 170. It went from 170 to 201. That's an 18% move. And on the 4-hour chart, CrowdStrike has just been crushing it. You guys know. And essentially, we called this out. Not to toot my own horn, but we called this out. We broke out of that ascending triangle. You guys can see my previous analysis here. We ripped all the way to 200, which you guys can see on the 3-year chart. This was a huge level from, when was this? Middle of August of not this year, but last year, 2022, we hit 203, then sold off. We got that triangle. We broke out. We filled that gap. And now, let's be honest, we're getting a bit overbought, extended, in other words, which we have earnings coming up. I don't know if these earnings are going to be good enough to extend this massive rally that we've already seen is kind of what I'm getting at. So for me, when I'm seeing a stock that is up massively heading into earnings, even though the company's doing well fundamentally, it's clearly the bulls are in favor, right? The momentum's in the bulls' favor. Even in that case, I'm still wary about a stock that's super overbought on the RSI. It's up 20% in the past 3 weeks. Heading into earnings, for me, I'd rather just wait. 28th is earnings, so about 2 weeks from today. I'd rather just wait and be like, all right, let's see what these earnings look like. Let them come out, and we'll see if the stock pulls back. And in that case, we can get a decent entry point, maybe at 175, 180 on this one, instead of trying to FOMO into it at 205, 200. Earnings suck, and then you get caught in a bad trade, right? So, look, I mean, ultimately, we could break out at 205, but I don't think that's going to happen in the short term, right? I could be wrong, but I don't think that's going to happen in the short term unless numbers are just ridiculous. And ultimately, again, maybe in a couple of months, we do break above 201, 203. Then we start going towards 240. That will be my next target, 240, which was the high from April of 2022. That could be a possibility, an opportunity, but not at this moment in time, in my opinion. I'd rather personally just wait. I'm not saying it's not for sure going to happen. Obviously, we don't know what's going to happen, but for me personally, guys, and please do your own research, I'm waiting on the sidelines on CrowdStrike. Let me see what else ended up moving today, guys. Then we'll wrap up this video. I appreciate you all for tuning in as always and watching throughout. Let me know in the comments if you stuck till the end. Say stuck till the end. So ABMB is another one that I'm looking at. We have a wedge here on the 4-hour chart. Still not doing much of anything there. Looks like Disney. Look at Disney go, guys. This is holding on to the gains pretty much from post earnings, which is good. You can see here on the 5-day. We're well above where we were before the earnings. This stock was at about $84. Earnings came out. It shot to 89, ran up to 91 the next day, pulled back, held around 87, right? Now we're back to about 89. If this could start breaking 90, 91 later this week, this could be one that's pushing $100 again before you know it. And you all probably know, maybe not. I'll tell you right now, Disney is one of those turnaround stocks that I think is going to bounce back over the next 5-10 years. Target is another one that I'm not too convinced of quite yet, but that could also be a candidate. So when I'm investing, side note here, guys, I like to buy out of favor stocks that are kind of in the dumpster, if you will, which, let's be honest, Disney is one of those. Target is for sure, it's down 60% from all-time highs. That's another one. There's probably a couple other ones as well, but I truly think Iger is going to turn around Disney. They had a bit of a hiccup over the last, the stock hasn't done crap in 10 years, but the new CEO, the old new CEO, a bit of a hiccup with him, got rid of him. Now we have Iger back. I truly think that, and plus he brings a lot more confidence to the investor base, but I truly think he's going to get Disney out of this funk. 5-10 years from now, we could be at all-time highs. I could be wrong, but that's the bet I'm personally making. And look, he brought Disney not obviously to where it is today. Well, there's a lot of factors that has brought Disney to where it is today, but he had a huge run before he stepped down or whatever. He had a 25-year run or however long that was, and he did very good things at Disney. He's back now. I mean, he's been back for a couple quarters, but still, this, I think, will help the company longer term. I'm not thinking, for the next couple quarters here, guys. I'm truly thinking 5, 10, 15 years. I think Disney will do pretty well, so I do own that. Let's see what else. Anything else here, guys, before I end up wrapping it up? I'm talking too much, I feel like. But yeah, man, that's pretty much it. We could wrap it up here. Not too much to talk about. Let's see what ended up going down very quickly. And not any notable names that had too big of a red day today. Maybe Adobe, but this one's very overbought anyway. I mean, this thing needs to pull back. It went down about 1%. All right, boo-hoo. It's up like 60% in the past couple of weeks, so I'm not going to feel too bad about it. But yeah, guys, that's it. If you enjoyed the video, hit that like button. Make sure to subscribe. Follow me on X as well, at Stas Talk Stocks, link down below. And you might as well get your free stocks from Moomoo. Once you fund your account at least $100, you get 5 stocks, each up to $2,000, and you get a free share of SoFi stock as well, just cause. And fund your account at least $1,000. On top of those 6 stocks you just got, you get 10 more stocks, totaling 16 stocks, again, each up to $2,000. So use that link down below. And with that being said, guys, cheers. I'll catch you all in the next one.